Coming up on episode 2 of Hard Fork, J.R. Willett. Meet the leaders in blockchain and the future of finance. This is Hard Fork.
Welcome back, Hard Forkers. Episode 2 of our Hard Fork series with myself and co-host Lawrence Grinseri. Lawrence, welcome back.
Thanks, Sean. It's good to be back.
And a fantastic guest. We're a real pleasure to have you along, J.R. Willett, the inventor of the ICO.
Yeah, happy to be here.
Thank you, sir. So, J.R., you've clearly got one of the more interesting CVs in the space. One that would get you many interviews, some of which probably have been unwanted.
I've done a few interviews. I haven't had any that I would call unwanted. I think I was early enough that I just caught the whole regulatory system off guard. People after me had a lot of unwanted interviews, but my assumption is that what happened with my case is there was actually a report filed with the SEC, and I know this because when I was doing the first ICO on the Bitcoin forum, I saw a post from a guy who was really mad, and he said, I've reported you to the SEC, and good luck and in jail or whatever. And I was kind of worried about that. I was like, wow, did I actually break a securities law here or something? Maybe I did. But I assume what happened is that, I imagine the SEC being, guys sitting around drinking coffee and not having heard of Bitcoin at all, much less ICOs. They get this report, it just reads like gobbledygook, and they just, hit next, and probably got buried in some low-level functionary, the secretary's inbox or something, and never made it up the chain to anybody who cared. I'm sure if they had it to do over again, they probably would have handled that differently, given what they had to deal with, what came after me.
Fantastic. So, could you maybe give us a bit more insight into how it all came about, in short?
The idea for the initial coin offering, and by the way, I did not call it that. That would have been dumb. But the idea was it had its roots in a really profound laziness. I had an idea, and I knew something. I'd read, a few books and things about startups, and I had an idea of what would be involved with, chasing venture capital. And I didn't feel my personality was the right personality, maybe not even to be an entrepreneur, but certainly not to go around asking a bunch of venture capitalists who probably were still skeptical about Bitcoin if they'd even heard of it. This, back in, I guess this would be 2013. Not a lot of venture capital money was flowing into cryptocurrency when I did this. So I knew it would probably be a very difficult hill to climb, but I knew that there were people out there that both had some newly minted money and were very interested in the space that I was interested in. They were my friends on the Bitcoin forum, and I thought, this would be the group of people that maybe would be interested in what I'm, my paper that I wrote and what I'm thinking about for protocol idea, and so that it just seemed like common sense to ask those people if they wanted to be a part of it. And then how do you do that? Well, turns out anybody can release a token. I had written a whole paper about how to release tokens, so I thought, well, why not sell the tokens? Sell them to people who are interested in, and then if the protocol takes off, maybe that will be something they're glad that they bought. That was my basic idea, and that's the basic premise that it drove the huge boom in 2017, and certainly there's plenty of people still trying to do stuff like that.
Fantastic,
Scott. I mean, you said that in some past interviews that you found it was quite simple to build the platform on the Bitcoin protocol. Can you sort of tell us how much effort that took you? How long it took you to build that initial exchange?
So let's see. Well, there's two pieces to when I talk about the simplicity, I'm talking about mostly the conceptual idea. So I wrote a white paper, and it was a little embarrassing even to publish it because it seemed so simple, like almost trivially simple to create a protocol layer on top of Bitcoin. In fact, before we built any software, we could just follow the transactions just manually through the blockchain and see who owned what. I mean, that's how easy it was to track this. Because what we were doing basically is we were just taking regular Bitcoin transactions and we were saying, hey, if you put some extra data in your Bitcoin transaction, that means something new. It means I sent a new kind of coin to you and not just Bitcoin because it had these extra letters or numbers in it or whatever. It came together really easy, and it seemed really strange that nobody was already doing that. I ran a few experiments on the Bitcoin forum with embedding extra data. I remember I ran a little betting pool where you could place your bet, and what you were betting on was embedded in how much money you sent. And it was like the least significant bits of the the dust of the transaction, as it were, contained what your bet was. I think we were betting on, I don't know, the price of Bitcoin or something, and whatever you thought the price would be, you put that in the least significant bits of your thing. I was just experimenting to see, can you do stuff like this, and it was so easy, stupidly easy. So I thought, well, I'm gonna give this a shot. It took me a long time to get to the point of giving it a shot. I wrote the first draft of the paper, January 6th, 2012. And I didn't actually act on it by launching the first token sale until 18 months later, so a year and a half later. And during that 18 months, what I was really hoping is that somebody else would do it, because I thought I was a poor choice to lead that effort.
Were you surprised when the whole ICO boom happened, going into 2016, 2017?
I don't think surprised would be the word, because it just seemed like something that's so easy to do that it should have been more people doing it, and in fact there was a lot of money being raised. And I think usually when money kind of rains from the sky, there's usually not a scarcity of people who go outside with buckets, and like that just attracts people. So it didn't really seem surprising. It seemed a little surprising that it took that long.
I mean, I started getting into the ICO market 2017. And I thought it was fantastic. I sort of think the democratization of capital markets is what really you've given birth to. And I think that's going to have long-lasting positive ramifications in terms of how companies in the future, ideas will turn into startups that will then turn into small to medium enterprises, and eventually some of those companies may become the next Google or Apple, of the future, all being sort of issued as a digital certificate from cradle to grave without having to move from market to market.
Yeah. I'm a big believer in, and you mentioned this before we started recording, DeFi, the decentralized finance. I'm seeing a lot of incredible innovation in that space, it's really interesting stuff.
On that note, I'm actually making a series with some colleagues at the moment on DeFi. So I'm sort of playing somewhat of catch up myself, really wrapping my head around what is happening there. Obviously, it is sort of an evolution from, we've had the ICOs and earlier through to IEOs, DICO and the bonding curves, as well as STOs. Could you maybe talk a little bit more about that evolution and specifically DeFi? What is interesting you the most in that space at the moment?
Well, so the evolution of fundraising is mostly about fleeing trying to stay one step ahead of the regulators. And the only reason that those innovations are happening is they're trying to get away from something that will get you fined and towards something that can let you raise money unmolested. And I don't know. I mean, people, because these sorts of fundraising models are not, I mean, it's more like an ask forgiveness rather than permission type of model. It used to be, if you want to go list on the NASDAQ, right? Like you can't just sit down at your computer and with a few keystrokes have a new stock float on the NASDAQ. You have to get permission from a number of gatekeepers in order to do that. And as long as it's that easy to just, with a few keystrokes, produce a new coin, it doesn't really matter what the regulators do. People are going to try it. It's kind of like trying to stop file sharing, I mean, it's like, okay, I mean, you can provide people with better alternatives, and maybe they'll do it less. But if it's that easy, people are just going to do it. And it's a fact of life that the regulators will eventually have to acclimatize themselves to. And, I'm sure they will continue to prosecute the worst offenders, and hopefully, I don't like to see scams succeed any more than the next person. So, I hope that's where they're focusing most of their attention. Although, to me, it looks like more of their attention is focused on trying to suppress the market as a whole, which seems unwise and unproductive to me.
It's interesting you mentioned like file sharing, because, a classic example where some new innovation that today has become mainstream and extremely powerful, I see is in music. I mean, I think we all remember Napster, and that was something that the music industry were doing their utmost to try to tear down.
Oh, yeah.
But and I empathize with artists that weren't able to get money for royalties, but that's given rise to Spotify, and really that's worked out to be really good for the artists. And the industry in general, yeah.
And the question is, would we have ever gotten Spotify if people had not forced the labels into a existential crisis of self-revaluation, over the last couple of decades?
But I think the ramification for, especially now in this world where eventually we'll get out of this COVID-19 situation, and I imagine there's going to be a lot of restructuring, across multiple industries, and that would give rise to, the need to raise funding, and on the other end, you're creating financial products being distributed to the buy side. I mean, I see, in some respects, this is the perfect storm that's going to see the rise of, I think, in the regulated space, the digital security market. Across a whole bunch of new exchanges. Here in Singapore, the regulator has already anointed a few exchanges, digital asset exchanges, to be regulated. And they don't do anything here without a purpose and a vision in mind. And you sort of see where things are heading.
Yeah, it's a rich tapestry of different regulatory environments and different people with different ideas and people trying stuff. The decentralized finance world is really interesting. There's an incredible amount of innovation, financial products that were never before imagined, except in somebody's dreams, are becoming reality in a decentralized way, and it's absolutely crazy and interesting and fascinating. And this is kind of what I thought was going to happen. I don't know how long ago. What would that have been? A decade ago, when I first started reading about cryptocurrency, I thought we're going to get something a lot like what we're seeing now with decentralized finance. I thought we would get it in like a year or 2 years. Like, I was just ridiculously optimistic about how fast things would happen. But I mean, this is sort of what I've been waiting for personally. Is if you look at the size of the financial markets, one time I made a little visualization for myself. I created a visualization with bubbles for the different sizes of different pools of money. Like, how big, if we just have a bubble for all the checking accounts in the world, how big is that bubble? And how big is, the stock market compared to that? And as I made all of my bubbles, I came to derivatives and foreign exchange. And it was like, if you've ever seen a picture of the solar system that's to scale with the sun next to the other planets, and the sun is just so much larger, that was kind of the feeling. I mean, you could just see the edge of this huge sphere intruding onto the diagram. And that's all the derivatives, options and Forex and when I looked at that, I thought, if even a tiny fraction of that money moves into cryptocurrency, like, the bucket just isn't big enough to hold. I mean, it's going to have to become, exponentially more valuable. And that was my premise for getting into cryptocurrency in the first place, was I thought that sort of trading would eventually make its way onto the blockchain. And then at that point, it would have to become stupidly more valuable. And because that's my premise, when I look at the the whole market cap of all cryptocurrencies, it still seems even though we've had a tremendous amount of growth, it still seems stupidly low compared to what it could hold and what it may hold someday.
I mean, I'm more from the fintech side, and I'm sort of working through my company, Skyhill Capital, to bridge between the conventional environment and marketplace and the emerging digital security networks. And one of the things that I find quite surprising is you don't need to wait till all these newfangled digital securities start getting issued as native products to actually put the economy onto the blockchain. You see projects out there. I know banks, for example, exchanging high quality liquid assets, bonds effectively, between each other over a blockchain network to maintain their capital adequacy ratios. Yeah. But they're doing not with bonds that were issued as native digital securities. They're doing it with bonds that are conventional, but the ownership information and the details about the actual bond itself are held on the blockchain. So effectively, right. The bond doesn't move, it sits in custody. The banks are effectively just making movements on a ledger as part of the management of their capital adequacy ratio. The cost savings, from what I've read, is been in the order of 60+% reduction in the fees to do those transactions.
I don't know, how controversial do you want me to get on your podcast? I have some strong opinions about some of those use cases.
I'd like you to. I mean, obviously, I'm for your thoughts on the private versus public blockchain scenarios, etc. So, look, I mean, please do give us your thoughts. Maybe sort of starting with what do you see as the best use of blockchain so far, and where is it going in your opinion?
My favorite and best uses of blockchain are in the decentralized finance type of thing, where you've got essentially the ability to place forward-looking bets on what you think is going to happen in some financial sphere, and have that paid out automatically in a decentralized way. That has inherently attractive things to it, and like I said earlier, like the market that you are mirroring is so huge that it does not take much of that market moving onto the blockchain to significantly increase the value of all the assets there. When we talk about things like bank-to-bank transfers, anything you replace the existing systems with is going to be better, cheaper, faster. Because what they had is so old and so awful and has been around for so long because of regulatory things. I could replace it. I'm exaggerating, but I could replace it with carrier pigeons and probably get a 60% savings, over whatever they were doing before. So maybe it'll be a good thing. I've been wrong a lot about a lot of things in my life, and it wouldn't be the first time. But I get distinctly unexcited about business to business, basically problems that already have solutions that work and in the existing world. But if you really need a decentralized solution, you have to have something that you need decentralization for, which means you're going to have to go around an obstacle of some sort. And banks don't have that problem. They have problems of regulation and old software, and everything's hard to change and slow to move, and legacy systems that get maintained over the course of 30 years in ancient programming languages, you name it. I mean, they do all of those things, and they will for a long time, I'm sure. Blockchain excites me when it is cutting new ground with kind of blue sky type of constructs that the world has never seen. Any one of which could become, the killer decentralized finance app that attracts huge amounts of money into it. So I love that stuff. It's catnip for me.
One of my sort of should we call it pet hates in the existing financial services world is credit cards. I find that you could be someone with a 30+ year good payment history on a credit card, but you're still getting charged 28% annualized interest on your credit card debt, largely being pooled with all these other characters and non-performing loans and they're managing their risk as a part of a monolithic sort of a portfolio of credit card users. What you're seeing now with the crypto cards that are coming out, which also operate on the Visa network and allow you to sort of manage all your digital assets and turn them into fiat and do debit card transactions. Yeah. They're perfectly set up now for some DeFi business to plug into that and says, hey, let me offer you some credit facilities now based on what you are holding in your wallet and maybe the data around your immutable payment history that eventually ends up on the blockchain. I'm sure that's going to happen one day. All our sort of past credit histories will end up there, and get evaluated based on your performance and be rewarded for good performance with a much lower sort of interest rate on that facility.
It is an interesting space. I think it's difficult. I cannot conceptualize, and it may just be a failure of my own personal imagination. I can't conceptualize a way to do debt on the blockchain that does not require some form of coordination with existing legal structures. Debt it's like insurance. Insurance and debt are two things that people talk a lot about in the blockchain, and they're very difficult to actually implement because they need real world hooks. With debt, you need a real world hook for what do you do if someone's not paying their debt. Yeah, and you can do debt on the blockchain as long as it's collateralized debt. If you got collateral worth the however much you're loaning somebody in the blockchain, then debt is easy. It's uncollateralized debt, which is most people want debt for, is uncollateralized debt. Debt that is and the reason we can do that is we've got a whole legal system that enforces things like bankruptcy and so forth, and consequences essentially for people who don't pay their debt. And it's really hard to do that on the blockchain. Now, you could eventually maybe have reputations on the blockchain that are so precious that you can collateralize them and threaten to ruin someone's reputation if they don't pay your debt back, but that's a long ways in the future if it ever happens. So yeah, debt is hard, insurance is hard. There's just some problems that naturally marry to blockchain solutions, and some that are sort of a Frankenstein, monsters that are kind of sewn to a blockchain that really have no business, kind of like sewing a horse's head to some other animal.
Well, we'll sort of have a look into the future with you at the moment, and also find out what you're up to. But I'd love to hear some stories from the past, some of the more amusing things that you've seen take place with the ICO world. You got anything you could share with us?
Oh yeah. I have a story that I like to tell about smart contracts gone wrong. And this is something that when Ethereum first launched, it was both very exciting and also a little more than a little concerning. And I would frequently and publicly talk about my concerns about Ethereum, which was something along the lines of, they at the time they first launched, they were talking about it like Ethereum is the JavaScript of money. And that the good side of that is that being the JavaScript money, really, really easy to conceptualize, easy to use. The bad side of that is you're the JavaScript of money, with all the bad things that come along with being a programming language that that handles money. Specifically, the idea that any code that handles money is going to be a target for hackers, and any smart contract that is complicated enough to be interesting is gonna, it's gonna have bugs, and you've created, if you've got a smart contract that's handling millions of dollars or billions of dollars, the prize for finding that bug is potentially enormous. So you're gonna have a lot of people looking at your code, and in fact, that's exactly what happened. We have had a number of smart contracts with vulnerabilities that were exploited and to great loss of people and great gain of hackers. So that's in that context. That's sort of my background, and I don't want to denigrate Ethereum. I think they're a great project and an extremely well led project. So. But that is the downside of what you might call Turing complete money. Now, a story. I was working with a company on a token sale, and they had this sort of contractual relationship with another company where they owed them a bunch of our tokens. I don't remember what they did for us, some promotional thing or something, and so we owed them a bucket of these tokens. And it was a big enough bucket that we didn't want it all dumped on the market at the same time. And, we were trying to find a way to enforce that and, pay it to them in installments or whatever. And they're like, oh, look, we built this smart contract, and you send all the money to the contract, and then it unlocks, 25% at a time, over several months. And I remember telling the guy that was running the company, I was like, dude, don't do it. Like, something will be wrong with that. I mean, I haven't found a problem with this contract, but I promise you, like, they just whipped it together, and it was a chunk of money. I think it was, and this is memory. I could be wrong. I think it was like $1 million worth of tokens. So big chunk of money. And, I was like, you don't want to send it to a smart contract and rely on that thing having no bugs. I wash my hands of this, I think was the exact words that I used. But they really wanted to do it that way, and sure enough, we sent them these tokens, and sure enough, I don't remember. It was maybe a couple months later or a couple weeks later, we got a sheepish communication from them. Oops. You sent all this money to this contract, which will never come out because we made a mistake in how we coded this thing. But good news is, if you flush some ungodly number of tokens through the contract, it'll unlock, because there was some like off by, a couple zeros error. It'll unlock and all the money will come out. So can you do that for us? And we were in a situation where, we'd created a stupid number of tokens. We were going to sell a small number of them, and whatever were unsold were just going to be destroyed. And so we hadn't destroyed the unsold tokens yet. So we were sitting on a massive pile of these tokens. And so we had a dilemma here. We had an ongoing relationship with this group. It was, a fairly influential person that we didn't want to alienate. And so the business decision came down, yes, we're going to try to unlock this money for them. And so I compare this to if you drop your ring down the sink, if you try to get it out by pouring molten gold down the sink to flush it out. I mean, that's essentially what we had to do. And so, we took what would have been, if the price of this token was trading on the open market, it would have been many millions of dollars worth of this token, which we had promised the world we were going to burn, right? So if this money gets out, we've destroyed the economics of what we're building here. So sure enough, we build a little test model of this contract. We're like, okay, we're not going to test this with real money. We're going to, we set it up exactly like their contract. We set it up. We created a fake token. We sent some of the token to it. Sure enough, the thing locked up and wasn't letting any money out. And then we tried flushing it with a whole bunch, and sure enough, it unlocked and all the money came out. And we're like, okay, we think this works. And man, we sweated over our laptops, and we checked every detail of that thing for days. And we finally did it. And sure enough, everything worked, and we immediately sent the funds, the millions of dollars, back to the original wallet and burned it, as we'd promised the world that we would. But it was one of the most hair-raising moments I've ever had, and completely unnecessary. And I completely warned them it was going to happen, and they ignored me.
You've mentioned actually that I think the solution to issues with smart contracts being buggy was to, and I thought this was a good approach, but just to create templates that you could then stamp out, and obviously those templates would be fairly rigorously tested.
Yeah, you've really done your homework on me. I have said that. I think that there are a lot of common things that people want to do with smart contracts, and rather than having each person build their own, and Ethereum has done some of this to their credit, by the way. When it came time for me to do a token sale, I literally copied the Ethereum example code for it and used it as unchanged as I possibly could. And my reasoning for that was I at least know, this is a very commonly used contract. It's been well scrutinized, and I at least know I'm not adding, some stupid mistake to it. So I appreciate, that they are trying to do stuff like that. But, if you handle those most common use cases, people won't have to write their own potentially buggy code and have that bug be found out when, millions of dollars are at stake.
In terms of from a security standpoint, and at the same time, a flexibility in the ability to develop these smart contracts, I mean, would you say Ethereum's the best, or do you see others that are good candidates?
So the way that I have always approached what projects I'm interested in cryptocurrency has been a sort of an ear to the ground approach. I'm not one, and again, I may have mentioned at the top of this interview, one of my prime driving motivations is a profound laziness. So, it's pretty rare for me to read through people's white papers, for instance. I've done it a couple of times, but usually the most effective strategy, if you're just looking to capture the most value, is to keep your ear to the ground and hear what people are talking about. And especially people that are smarter than you. And so, find the people that are smarter than you and find out, and more economically savvy. That's important. There's a lot of smart people that are not economically savvy, but you kind of get those people and you listen to what they're saying and listen to what they're excited about. And then what I have found is when my ear to the ground, my polling of the smart people of the world, is that most of the excitement is around projects that are happening on Ethereum. Now, I'm not going to try to claim that one of those projects is going to be a runaway success. There are several that I like a lot. But what that tells me is that the underlying protocol that is most likely to benefit from any of them being successful is probably Ethereum. So from an investment standpoint, it doesn't really matter. I mean, it does. Like, if you could totally predict the winner, I mean, obviously buy their token, right? But if you could just predict from an ear to the ground standpoint that most of the action is happening on Ethereum, maybe just buy some Ethereum and you'll probably win no matter who is the ultimate, killer app.
I've always felt that, I mean, Bitcoin and Ethereum, pretty much most exchanges use them to cross with most ICOs. I mean, Bitcoin for all of them, and obviously Ethereum for Ethereum issued ICOs. And because of that, they sort of form what I like to refer to as the G2 of the crypto world currencies.
Yes, yeah, that's a good way to say
it. The US dollar and maybe the Japanese yen, and so as the blockchain starts to permeate more and more throughout the world, and as more of the economic value moves onto those networks, I've always felt that, Bitcoin especially, because it's crossed with everything. But I also agree with you about Ethereum. I think if those ICOs on Ethereum start to become more prevalent, then of course Ethereum is going to grow in value over time as well.
Yeah, I want to comment on the comparison to Bitcoin to Ethereum. There is no technical reason that Bitcoin could not do anything that Ethereum is doing. In fact, when Bitcoin first launched, I remember they had a scripting language built in that they were like, well, let's just pause this whole scripting thing because it's hard to predict what's going to happen with it. We're not going to enable these scripts just yet. And of course, it never got enabled. But there's no reason that Bitcoin can't do all the things that Ethereum is doing. However, Bitcoin has what I would characterize as a governance problem. Like, there's no technical problem with Bitcoin. There's a governance problem. And I mentioned earlier, I like how Ethereum is led. And I said that for a very significant reason, because I think that is why all the innovation is happening on Ethereum right now, rather than Bitcoin. Bitcoin, if you want anything to happen, if you want anything to change, you have to get a consortium, maybe even a universal approval, or very nearly so, from a number of people, all of whom are very, very smart people. And I like to say they also are people who think they're much smarter than they are. So that's a dangerous combination when you have a bunch of those people trying to make a decision by consensus. It just basically nothing ever happens unless it is so eye-bleedingly obvious that it must happen, and then they will all agree on it. Otherwise, they'll disagree and nothing will happen. And that's been the history of Bitcoin for the most part, is just one of inertia. And when you get someone, and I know Vitalik does not like to be thought of as, the guy. He wants it to be a more consensus-driven or decentralized governance, but in reality, having somebody that can say, there's two equally good ways of doing this, and we're doing plan A, that keeps you from getting locked up in eternal, bickering. And I appreciate that about the Ethereum project a lot.
Yeah, so JR, interesting point you raised there. I'd just love to come back to it a wee bit. There's those within Bitcoin BTC or Bitcoin Core that would say, these issues of consensus, of governance, really sort of make Bitcoin more commodity-like would be an argument I've heard from them. So I'd love to get your thoughts on that, and obviously your opinion on the Bitcoin forks, so Bitcoin Cash and SV. There are projects moving across from Ethereum onto Bitcoin SV. It's one that Lawrence and I had a look at closely last year. Could you give us your thoughts on those two other incarnations of Bitcoin?
I'm so, what's the word? Apathetic. That's the word. I'm so apathetic about those projects that I could not be bothered to even read about them. So Bitcoin itself will always be worth something because it was the first, because of the name recognition. Like I never worry about Bitcoin going to zero. I don't worry about any of the cryptocurrencies going to zero, because if you have a dollar, you can prevent any cryptocurrency from going to zero, and there's probably always somebody who will. The question to me is, well, okay, could Bitcoin be a commodity? Yes, it's got a lot of wonderful qualities that make it a good commodity. A very volatile commodity, mind you, but less volatile than it used to be, for sure. So maybe there is a statement to be made for that, but I'm so much more interested in the dynamic ability to have computational power of contract, enforcement, decentralized finance, those things. That's where I want to be invested.
Yeah, look, some of the guys that I make a bit of content with, they're at it. They sort of view Bitcoin effectively as a piggy bank. It's their store of value. They've got their Bitcoin. They're happy with that. But their real interest is in what's happening on Ethereum, especially in the DeFi space. They'll absolutely kill me if I don't ask you for a couple of specific projects, maybe in that space, that are sparking your interest at the moment.
Okay, so boy. I don't want to come across as too heavily endorsing something like JR says buy this project.
That's not what I'm doing here, Jay.
Yeah, I know. I'm just trying to self-censor a little bit about because but I have to say that the project that is doing the stablecoin DAI, really interesting stuff, both with their governance and with their protocol. And I'm and they may run up the tree where something goes wrong with their code. There is a lot of complexity there. But I see a lot of people using that protocol and layering stuff on it and incorporating it into other protocols, and that tells me it's probably got some staying power and it's probably got some good leadership. And again, this is not based on me having read their white paper and having looked for the byte that has the error. It's based on my ear to the ground read on the really smart people I know and what they're excited about and what they're using and investing in, and for some reason, embarrassingly, I can't remember the name of their token. I should know that because it's on a spreadsheet of things to look into more as potentially buying.
The Maker.
But, yeah, that's it. I'm stupidly brain farted on that. Yeah. So yeah, Maker. They seem like a well-led project that is being incorporated into other interesting projects in interesting ways. Yeah.
Okay, so I guess sort of we've got about 15 minutes or so to go here, but be great to hear what you're up to. What does the future hold for you?
My projects right now are outside of the cryptocurrency space, if you can believe that. I mean, I'm still heavily invested in like Ethereum and stuff, but when I was innovating in this space, there was just some low hanging fruit that was so stupidly obvious it kept hitting me in the head. And I just couldn't let it go unexploited. And I no longer feel like there is that low hanging of fruit. I feel like the people that are smarter than me have entered the race and they're doing a great job. And I just want to kind of keep my pulse on what other people are doing and make sure that my capital is allocated in the most efficient way possible. So yeah, I mean, I would not claim to have anything going on that your listeners would be particularly interested in. I mean, I've got an artificial intelligence project that will probably never see the light of day, and things like that. But but nothing in decentralized finance at the moment.
Do you see a big future for AI, JR?
Yes, where big is probably the right word. Good, I don't know, but definitely big.
There seems to be a sort of two camps now. Some thinking that AI turning into a Skynet and wiping out humanity is a little bit extreme, and another camp that sort of says, well, we don't ever see it getting that advanced. I mean, where do you think the real potential is?
I think both camps make good points. Like a lot of times it depends on who I'm listening to. If I'm listening to somebody on one side or the other, I'm like, wow, that makes a lot of sense. Yeah, that is true. And then the other side, I think the same thing. So, I think it's going to happen, and we're going to find out. And it doesn't really. I mean, I think there's probably not a lot. There are people that think there are things we can do to mitigate the risk. I don't think there's all that much we can do.
Some fairly learned people have sort of said it's just like anything else. Humanity's had to deal with, starting with fire and getting all the way up to nuclear energy. I mean, these are sort of milestones along the way to becoming whatever we're supposed to evolve into.
Yeah.
And getting a handle on artificial intelligence is one of those milestones. It's an inevitability. If we get it right, we move on to the next milestone. If we get it wrong, like with nuclear weapons, so far we seem to have managed it where we haven't wiped ourselves out.
In geologic time, though, nuclear weapons have been around not very long. It's like if your toddler picks up your handgun and in the first second hasn't shot themselves in the head, you're like celebrating. Well, there's still a lot of seconds left to go, so.
Very true, JR, but if Elon Musk gets his way, at least we'll be spread across a few planets.
That would be helpful.
We have a disaster recovery scenario, right?
Yeah.
Lawrence, any closing questions? We're just coming up on an hour shortly.
I think we've had a pretty good chat. My only question is, I'm liking the beard, JR. How long have you been growing it for?
A year. It's been. I mean, it's this beard is a year old. It's sort of a personal choice that I made about a year ago, and I probably won't keep it forever. But for the moment, it is suiting my mood.
It's very, as I said to you earlier, very ZZ Top. It classic.
Awesome, thank you.
Okay, listen, JR, we've absolutely enjoyed having you as our second guest. Obviously, it was Scott Stornetta that recommended having you on. So.
Yeah, I was super impressed that you got him as your first guest. I mean, like that's a big score for a starting podcast. So you're off to a good start. Although I'm afraid you've gone downhill a little bit at least from Scott.
I disagree.
Not true,
ICO. You've got a firm place in history, sir. So we're obviously going to start hitting you up for our third guest now. We want to keep that.
Yeah, well, I have Satoshi's email address, but he keeps ignoring me when I try to raise him on that. So,
well, okay. So you know who Satoshi is then?
Hal Finney. Yeah.
Really? That's your call?
Yeah. It is not a opinion that is rare in my circles. I've been saying it for many years, and it's just the coincidence of him passing away right around the time that Satoshi disappeared, and his very early involvement in the protocol. It just, if I was to step away from something, that changed the world that much, it would have to be something like death, if it was my baby, so that just made sense to me that it was Hal Finney. So.
Oh.
So you're saying that Satoshi's passed on to that great blockchain in the sky, JR?
Yeah. That is my personal belief. I would be delighted if he showed up, or they showed up somewhere and proved me wrong. But that is my personal belief.
You swapped some correspondence with Satoshi?
I sent emails into the ether when I was trying to write my project. At that point, he had only very recently disappeared, and I assumed he was still checking his email. And I use he loosely. I don't know the pronoun, but that for some reason in my mind, I think he claimed to be male on the Bitcoin forum, so it's probably fair. I sent him an email very early on when I was working on my white paper and didn't hear anything back. I never got anything from him.
Very good, but it was a great pleasure to have you on the show, JR. Scott is pretty big shoes to fill, but we felt that you've been a big disruptor, and probably will go down in the future as maybe that person that's changed the capital markets for the better.
Yeah, I think where you'll have to go from here is probably Vitalik Buterin. I think that's really your only. I'm trying to think of somebody more famous than Scott, and in that level of brains, and Vitalik's the guy that comes to mind. So if you can get him, he occasionally answers my emails, so maybe I could make an intro for you, but he's a very busy guy and he gets a lot of requests, so I don't know.
Yeah, he's actually also based here in Singapore, where Lawrence and I are. So we might just go knock on his door, let him
find him in a coffee shop or something and be like, "Hey, dude, come on our podcast."
Well, we're pretty determined, so it may end up being a home invasion. But we'll try to get him on the program. What do you think?
I think the thing with the likes of Vitalik JR is he does actually give a hell of a lot of interviews. He's on a million panels at the various conferences and so forth. Mm-hmm. So it's fascinating for us. Amazingly, Scott Stornetter is not that widely known. I've spoken to hardcore Bitcoin maximalists that'll tell you they know everything there is to know about Bitcoin, yet they hadn't taken the time to pick up the white paper, have a look who was cited in the thing, and go, who the hell these people were. They just absolutely astounded me. So hence sort of tracking Scott down and getting him on. And, to a certain degree, I'd sort of say the same about yourself. I know, you're well known within the, that core of people that know about this space, but maybe not so publicly known.
Yeah, Scott is like it's like that story with thieves, where if you want to find a really good thief, you don't catch somebody stealing. You catch somebody stealing and ask them, "Who's the best thief you know?" And then you go ask that guy, "Who's the best thief you know?" And eventually you find somebody who's never been caught, never will be caught, and is an amazing thief, And that's sort of how you end up with somebody like Scott. Like, who's the smartest luminary in the Bitcoin space? You ask people, you eventually land on people like Scott.
Yeah. Well, Vitalik may be watching this, and he probably just heard me say, "Well, we're not that fussed." So we're going to have a chat with you offline to find out who episode number 3 might have. But listen, we've really enjoyed having you along. Thank you very, very much for your time.
Yeah, absolutely. It's a delight, and I wish you luck with your podcast. It's a fun space, and you've got some competition, but I'm sure you'll have a blast doing it no matter what happens.
Excellent. Thank you very much. And Lawrence, thank you, sir, for joining us again. And to the audience, thank you very much for tuning in. I hope you've enjoyed episode 2 and are waiting with bated breath to see who JR helps us get on for episode 3.
Absolutely.
Brilliant.
Okay.
Thanks,
on that
JR.
note, thank you very much, guys.
Thank
See
you.
you later. Bye now.